Are you curious about how millionaires got their net worth up so quickly? Or are you struggling to grasp at what passive income truly means and how important it is for long-term success? This video is going to answer all of those questions for you. Welcome to 5-Star Finance. Most people get into investing to save and plan for retirement while growing their net worth over time. By consistently saving and investing enough money in the stock market during the working years, the goal for many is to build up a portfolio so they can live off their investments. For some people, making huge amounts of money in a short period might not be an easy task. But with passive income and considerable patience, the task is now more than achievable. What is passive income? The steps to make passive income are the following. You analyze, you understand, you invest, and then you wait for the compounding for straight-up cash in your account without having to do anything if the investment is still sound. This is exactly what passive income means. It describes money earned through zero or no active work whatsoever. For example, this sort of income is usually characterized by rental real estate and dividend stock funds sometimes. Now, some people may also call passive income indexing, as it sometimes includes investing in a broader market index. So, the next question which arises in the minds of people looking to generate passive income is how they can achieve passive income. Is it a long or short process? The answer to that lies in your understanding and ability to analyze stocks. How to build passive income in the stock market? Well, passive income may also be described as that one-time investing, which helps investors to generate a continual flow of money without even caring what's going on in the market. After some time, it's more like free money. But for the stock market experts, dividend stocks are the best possible way to upthrust or bolster your wealth in a short time. The formula is quite simple. Invest, wait, earn dividends, reinvest, and then you could probably stop overlooking it. When companies generate profits, a good portion of those profits are sent to investors, as it was the money of the investors which allowed the public companies to grow over time. Investors receive their shares in the form of dividends. After receiving dividends, it is up to the investor if he or she wants to reinvest that sum back into the stocks so that the share price goes up, or to simply live off dividends. The reinvesting strategy can also lead to additional shares. But the dividend yields are not always bright and sunny. They vary significantly from company to company, and sometimes they can also lead to cruel dividends traps. Sometimes they can even fluctuate from year to year. So make sure that before you invest your cash in a stock, the company should have a sustainable dividend-paying record. Sometimes when dividends are in the gloomy sight, investors can also opt for index funds as their go-to weapon for long-term passive income. These funds are mutual funds or exchange-traded funds linked to a particular index. They are most often managed passively. They can act as a source of passive income for many investors. Sometimes the transfer of index funds to lower transfer markets can shoulder some tax complications, which can suit many investors to make their money. So, after all, it is income without our active involvement. We're just putting our money in to begin with, and the market takes care of the rest of it. This can also be taken as a set it and then forget it mentality. However, sometimes passive income also requires some of your active attention, as we're always uncertain as to when the company's fundamentals will rise and when they're likely to fall. It requires analyzing ability and certain know-how about the company. What is the highest paying passive income investment? So, what is the highest paying passive income investment? Well, the trends tell us that it has always been through dividend-paying stocks. Historically, these assets have tended to outperform all other ways of generating passive income. Money investors who want to live off those dividends, but in reality, passive income allows us a breath or two to plan our future investment goals. They allow us to make more money by simply investing again or reinvesting strategies. That can also mean that you need to put your money to work if you're lazy yourself. In that way, passive income ideas are probably the best ideas out there. But before you get into the game, realize that not every investment is going to pull off wonders for you. You're going to have your off days just like every other investor in the market has. Beware of the strategies which tend to lure the investors in by simply paying them thick dividends and hooking them. This can lead to devastating results in the longer run. For example, the price of your share can significantly decrease and can peel off your dividends. It might end up costing you money instead of earning you money if not analyzed properly. Passive income strategies can greatly simplify a person's life. But at the end of the day, work actively or not, it all comes down to your ability to understand and analyze before investing your money and sinking it. So the question that arises is, how much money do we need to live off investments? How much money do we need to live off investments? Before stepping into the market, everyone has a goal as to how much money they will need to live off investments. During the years, your portfolio develops. Instead of just putting the dividend cash straight in your pocket, you need to reinvest to grow that wealth at a rapid pace. Another way is to just go on an investment hunt out there and invest in assets that will keep making dividends for you and will cover your annual expenses. To determine the actual amount you'll need to live off your investments, you need to keep two variables in your long-term plans. The first is the amount of cash you plan to spend per year. The second is the amount of dividend yield that is going to come from your planned portfolio. Having these two values, you can analyze how much money you need to live off your investments. In mathematical terms, divide the former with the latter variable to calculate the money you require. Let's just say that you plan to spend $50,000 per year on your family in the future. This includes all the expenses. But if you believe that you can get a portfolio that yields 4% per year, that simply means that you require $1,250,000 to start with. Of course, these values vary depending on the need and the plan an individual has. The best way to start building up your investing career is to start measuring up your expenses and adjust them if possible. It can be anything. You can either write your expenses off, or you can simply use a digital tool. So the question that arises is, how long will it take? The time varies with the plan, and if you are starting slow, it means you need to put in more years. Conversely, if you're starting big, ultimately that means you're taking less time than usual. Once you find out how much you need per year, you can start to save according to that. One thing is for certain, is that you don't need to know exactly which asset will pay you that much dividends. So make sure you have a plan for dividend sustainability. While planning, you also need to assume all the tax considerations. So, do you have a plan to generate passive income in a short period? How do you plan to live off your investments? Let us know in the comments section below. Compounding effect. With passive income, we can achieve stable income, and that too with minimal effort. One may question, how is this even possible? The answer is the compound effect. Or to put it more simply, interest on interest. Gradually, your shares start to swell up, and by the time you are retiring, you have a good amount of cash in your bank account. Before you choose which stocks to build your portfolio and earn your passive income, first, you need to know that there are a total of 6 stock categories, and either of them can impact the speed of your early financial freedom. Make sure to check out our free ebook in the description below to learn how these 6 stock categories influence your early financial freedom plan and passive income. Check out this video we handpicked for you, and we'll see you in the next one.